Enayatzadeh is a financial guru. He is the guy you want to go to with all your money problems. He is the guy you want to hire. He's the guy you want to hire when you have some investments you want to do. He is the man to speak to. He's the man with the plan, the man to speak to when it comes to money here in Montreal. Daniel Enayatzadeh. Tax season, Daniel. You have till the 30th to file. It's the 28th today. Have you filed your taxes yet?
I've sent everything to my accountant, and he's told me that he's going to do it tomorrow, hopefully. So if you don't see me here next week, it's because I'm in jail. I'm kidding. Thank God we live in Canada where we don't throw people in jail.
We don't.
For not filing tax, for not paying income taxes.
No, we just charge them with outrageous interest.
Yeah, we just basically, freeze their bank accounts and stuff like that. But
we
don't. Excuse me. But we don't throw them in jail. So tax season is basically slowly ebbing away, and just to specify, April 30th is the deadline for personal income tax filing. Right. You have until June if you're filing business income taxes. So most people are filing personal income taxes, the average person. So April 30th definitely is the deadline. So that you can still do your taxes on April 30th. So you can still do it tomorrow. You still have Monday and Tuesday to take care of it. But tax time is a good opportunity to really review your overall finances, take into account what you spent last year, how much money you made, where your money went. It's a good time to really reassess, do a little bit of some soul searching, or really some money searching to find out what's going on with your finances. And it's a good time to say, this year maybe I'll do things a little differently. Maybe I'll organize myself a little better.
Maybe I'll save some money so I can pay my taxes.
Maybe I'll save some money so I can pay my taxes, or maybe even have money saved for other things. And you know what? One of the things I'm talking about to my clients is debt repayments as a type of tax-free return. Because essentially, if you take after-tax dollars and you put them towards a debt or a liability that you have, let's say a credit card or a line of credit or a mortgage, and you pay that off instead of paying interest on that, it's in an indirect way making money tax-free.
But isn't debt a tax write-off anyway?
It depends what type of debt.
Right.
If you take out, for example, a business line of credit to incur a business expense to grow your business, to make an investment, to have a marketing strategy, then it is definitely a deductible expense. But if you go to Walmart and buy some toilet paper, that's definitely, and you put it on your Visa, that you can't deduct that, generally speaking.
That really sucks.
But speaking of deductions, there is a large or tax credits or tax savings. There's actually a very good number of tax savings available to Canadians, and most of us are not aware, specifically those of us who like to do our taxes on our own. And I know a lot of my clients, a lot of people I speak to, are increasingly moving in that direction.
Are you encouraged to do taxes on your own? Is this something that...
I personally don't encourage it, because you might save a couple $100, even $100 by using your own, you go to Bureau and Grow, or you download a software and you file your own income taxes. But, in the end, there might be things that you miss or you're not aware of. So I come across a lot of my clients who swear by the fact that they've been doing their taxes for years, but they don't know that tomorrow morning they get a letter from the Revenue Canada that says they want to audit them. And there could be things that they miss, and they could not only miss on things that might end up biting them in the tuchus, as we say, but they might miss on opportunities. Now, I'll give you a few examples. The CRA, the Canada Revenue Agency, has a website that you can go on, and you can look at the wide variety of tax savings available for Canadians, including tax deductions, tax credits. I'll name you a few that some of us and some of our listeners might not really be aware even exist. So one being the family caregiver tax credit, a tax credit of up to $300 if you're taking care of a dependent. So let's say you've got your grandmother or your mother living with you, and that's definitely an expense. You can get some of that money back on your taxes. Another example.
Okay, but not your dog or your bird.
No, and not your egg either.
Not my egg either.
Not your eggy left that you have there. Okay, just to be clear. No. no inanimate objects.
He went to Hawaii. I didn't.
Oh, okay, so he's on vacation while we're here plugging away in the studio.
Exactly.
Okay, so, and the other thing that, like another tax credit available is, for example, children's arts tax credit. Most of us might not be aware that families can claim a tax credit of up to $75 for expenses if they enroll their children into certain prescribed programs of, let's say, artistic, cultural, recreational, or developmental activities. Another tax credit is the fitness tax credit. If you get your kids involved in a fitness activity, let's say you put them into karate classes, you can get a tax credit for that. If you use public transportation, there is a tax credit for that as well. If you're a tradesperson and you have purchased tools that you need for your trade, you can use that as a tax credit. There's a lot of things out there, and I encourage everyone to go on the CRA website and look into the variety of tax savings available. I can guarantee you that there are accountants out there that are not even aware of these tax credits. So a lot of these tax savings are new, that they come out every year or two in an annual government budget, and a lot of accountants are not necessarily up to date on the changing tax laws. So another thing that I also want to point out is RSP contributions. Now, many people contribute to their RSPs, right? Some people don't, but the ones that do...
Is it important to contribute every year to your RSP?
That's a whole other conversation. But yes, it definitely is important if you want to save on taxes, if you want to grow your money tax sheltered, you have to be able to afford it. You have to take into consideration your liabilities, your debt, before you just... A lot of my clients, they just blindly contribute into their RSP. Well, I have $1,000, I'll put it into my RSP. No, stop for a moment, sit down, look at what you have, what kind of debt you have, what kind of income are you making, what are you going to be needing this money, will you need this $1,000 in the future, what's going on in your life right now, and then look at things from a bird's eye view, and then evaluate, is putting that $1,000 in an RSP the best possible scenario? And when you walk into a bank, that's usually what they tell you, put it in an RSP. But it's important to sit down and look at things from a broader perspective before just jumping to the RSP. That's another conversation, but what I wanted to point out about RSPs is many Canadians have unused RSP contribution that they have not claimed on their taxes. I'll explain what that means very briefly. Let's say this year you contribute $5,000 into your RSP, okay? And tax season comes around and your accountant tells you, you know what, you didn't make that much money this year, so you don't really need to use the $5,000. We don't need to claim the full $5,000 as a deduction on your income tax. We only need to claim $2,000. The $3,000 is still in your RSP account, it's still generating interest, it's still being invested, but you won't get a tax savings on it this year. But you can use it in future years. And you'd be surprised how many of my clients forget that they have contributed in the past and they can use that for future years.
How many years could you carry it over?
As long as you want.
Really?
Yeah. I'm not 100% sure, either as long as you want or 7 years. I have to check on that, but I know it's a good amount of time. Your unused contribution room, which is something totally different, has no limit. What that means is, let's say you were 18 years old, you worked at IGA or whatever it is, at a supermarket, you worked in a dépanneur, and you made some money over the summer. When you make that money, a percentage of your income, generally 18%, is eligible to contribute into an RSP. If you didn't when you were 18, that stays there on your record and it follows you in the future. So that's when I usually tell some of my clients that are students that have side jobs, don't contribute into your RSP. You don't need to when you're a student. Save up that room that you've had, and then when you're a higher income earner in the future, when you're making more money, that room is going to come in much more handy, because the impact of deductions on your income when you're making $100,000 versus making $10,000 or $12,000 is dramatic. So that's definitely another important point, but very big distinction between unused contribution room and unused RSP contribution investments, claiming on your income tax. So unused contribution rule means you made money, but you never contributed the allocated space or percentage of your money that you made into an RSP. And the other is you've contributed already into the RSP, you haven't used all that money and deducted off your taxes for this year. You're saving some of that money to deduct it in future years. So that's the two distinctions that I wanted to make. But tax season, if you haven't done your income taxes, definitely get to it. I was telling Howie off air that one of my clients called me last week and told me I haven't filed my income taxes in 5 years. I need to speak to an accountant ASAP. So if you need to speak to an accountant, definitely find one as soon as possible. If you need to.
And if you're in that position, it's a really bad idea to call your accountant ASAP, but that's okay.
ASAP, as soon as possible. Thank you, Howie, for clarifying what I wasn't insulting any accountant. I love accountants.
All right, that's Daniel Enayatzadeh. He's a financial guru and our friend here on the Howie Silbiger Show. If you want to contact Daniel.
If you want to contact me, you can send me an email, daniel@truetalkradio.com. You can phone me on my direct line at 514-996-9400. And you can always visit truetalkradio.com, where I am a regular writer and I discuss a variety of topics. I have a section called Money Talks with Daniel Enayatzadeh, and we talk about everything about your money, investments, retirement, taxes, all that fun stuff.
And of course, you could always talk to Daniel through the Howie Silbiger page on Facebook.
Yes, yes.
So go to the Howie Silbiger page and click like, and you can talk to me, you can talk to Daniel, you can talk to all of us. Right there on the Howie Silbiger.
We can all be friends.
We can all be friends. All right, we're going to take a little break. When we come back, Enayatzadeh, grade 11 Bialik High School student, he's in studio, and he will be joining us right after this break. I'm Howie Silbiger. This is the Howie Silbiger Show on 1650 AM CJRS Radio.